So in this video, I do want to talk about the tariffs from the Trump administration and the escalating trade war between the two powerhouses of the world, the US and China. Specifically, I want to check out if there are any opportunities emerging from the market declines or the stock market crash that the media has been talking about and people on Twitter have been talking about nonstop since Trump decided to tariff the whole world. But we're going to go over my watch list on Guru Focus to see if there are any companies that are now in the buy range. And then we're going to take a look at my personal portfolio to see how the stocks in there are being affected. And we'll especially take a look at one stock, Lululemon, which is being affected a lot by the tariffs, but we'll go more into that later in the video. But first of all, I do want to talk about why I mentioned stock crash. If we look at the S&P 500, it's only down about 15% year to date, which is really not that bad. I think we could all agree on that the stock market has been pretty overvalued for the past couple of years. So we were always due for a correction. But don't get me wrong, the stock market could keep on declining. And if you're watching this video in a month or so, we could be looking at further declines, 20, 30%, who knows? But as of today, which is April 9th, this is not too bad. And if you can't stomach a 15% drawdown in your stock portfolio, then you really shouldn't be in the markets, in my opinion. And if we zoom out further, we can see that the 1 year performance of the S&P 500 is only down less than 4%, which is basically nothing. And if we zoom out further, 5 years out, which was at the depth of the COVID crisis, when I was buying into stocks, I went heavily into the S&P 500 in April of 2020, when everybody thought that the world was collapsing. And 80% on my money since then makes up about 12% CAGR for doing absolutely nothing, because the S&P is a passive investment. So I just bought it and I sat here and did nothing and got 12% on my money, which is pretty good if you ask me. Starting off with the first watch list, I have these companies here sorted by EV to free cash flow, going from the highest to the lowest. And we can first of all see companies like FICO, Copart, and Hermé, which are still extremely expensive. So we obviously won't be taking a further look at them until they would see a much further decline in their stock price. If we then go further down the list, we can see the price is starting to go lower, and we can see a company here, MSCI, which I'm very interested in buying, but unfortunately they're always trading at a similar multiple, around 30. So actually 28 price to free cash, but they would have to be closer to 20 times free cash for me to consider buying in. And if we keep going down, things do get a little bit more interesting. We can see a company here with ticker symbol IT, which is Gartner, trading at 21 times EV to free cash flow and 21 times price to free cash flow. Now, Gartner is a company that provides research and analysis, for example, in the cybersecurity industry, where I got to know the company by reading the annual reports and earnings reports of Fortinet, where they are ranking the best cybersecurity companies in different categories. So this is definitely something that we'll have to dive deeper into in a separate video. And here you have another company, which is ANET, Arista Networks, and they are trading at 20 times EV to free cash, 24 times price to free cash. So they are definitely dropping down, but this company has great fundamentals. And this is another one that we'll have to take a deeper look at, especially if the price keeps on going down. And if we continue on with another watch list that I have on Guru Focus, we could see a very interesting company here, Cerillion, a software company from the UK, still trading at very high multiples, 41. You could see another one, Livco here, trading at 40 times EV to free cash, which in my opinion is the best Swedish serial acquirer. So I would definitely be interested in buying into them. Then if we continue down, you can see Lagercrantz, another brilliant Swedish serial acquirer, trading at 31 times EV to free cash. You have one of the smaller serial acquirers, Momentum Group, trading at 26 times EV to free cash. Very interesting company with fast growth, and I would definitely want to buy into them if we can see the prices go lower and the multiples closer to 20. But again, things are getting a little bit more interesting once we get closer to the bottom. You can see KLAC here, Keep Looking Ahead Corporation, trading at 24 times EV to free cash. Usually they are around 30. So this is definitely discounted compared to the price that they've been trading at recently. Um, and the company has great fundamentals, great management team. If you read through their earnings report, you can see the emphasis is on all the right things. It's on free cash flow growth and returning capital to shareholders and return on invested capital and all of the good stuff we want to see. And like a lot of you know, KLAC is the market leader in the process control of semiconductors. I think they have about 56% market share there, but they have a big exposure to China, probably around 30 or 40%. I don't remember the exact numbers. And if we do a separate video on KLAC, we will definitely have to dive into the risk that these tariff wars are gonna affect the earnings power of the company going forward. Now, if we take a look at my personal portfolio, I have 13 companies in the portfolio, which I am really happy with. But one that stands out that's going to be affected the most by these tariffs is definitely Lululemon, with most of their production being in Vietnam and Cambodia, and those two countries being hit very hard by the Trump tariffs. Now, Lululemon has great fundamentals and a great management team, and the management team has been able to weather some pretty tough storms. But at this moment, it's really tough to say how exactly the tariffs will affect Lulu, because we don't know how long the effects will endure. So let's take a deeper dive into Lululemon and go over some of the things that I've noticed from the latest earnings call. Now, this here is a Lululemon deep dive that I made using Grok. It's very detailed, so obviously I won't be going into details on that one. Otherwise, this video would probably be 2 hours. But let's take a look at some highlights, especially concerning the tariffs and the added risks that the tariffs put on the future prospects of Lulu. Now, when the latest earnings came out, the tariffs hadn't been put on, but everybody was expecting maybe 10, 20% tariffs. Not the tariffs that Trump wound up putting on, especially Vietnam, which was at the top of the list, I believe. And in the earnings call, Megan Frank, the CFO, was talking about a 10% tariff adding 50 million to COGS, cost of goods sold, of a $1.3 billion base. And they would start shifting their sourcing from Vietnam to Mexico, where today they're only doing about 5% of their production and are aiming to have that at 10% by 2026, and are maintaining a lean inventory to be able to respond to the tariffs. And they also talk about 20% tariffs being $100 million in COGS, and that does push the company harder. But we'll have to see what the reactions will be after this massive shock with the tariffs being so high. Now, I have a section in these deep dives called Our Short Thesis or My Short Thesis, which is basically a very detailed short thesis that I have Grok make based on all the information, all of the write-ups, the short reports, and all of the annual reports. This is very detailed, so we're not gonna dive deep into this. But before the tariffs, obviously there were risks with a company, like with every company. That is something you have to get used to if you're buying individual stocks. So, like with Lulu, we had a risk of US market saturation and consumer weakness because the US was slowing down a lot, and it's accounting for 80% or 81% of the revenue for Q4 in 2024. But now it's back to growth. We don't know what's going to happen once the tariffs start to affect the prices of the products. but that was definitely a risk before the tariffs. Obviously, the tariff pressures and supply chain disruption is going to be the biggest risk factor and the biggest unknown with the company going forward, where Lululemon source 75% of their goods from Asia, 40% from Vietnam, and 17% from Cambodia. And both of these countries have massive tariffs on them. And you have this escalating trade war with China, where the biggest market for Lululemon, I think, growing about 34% for 2024, is China. So we don't know what's going to happen there. This will obviously affect the gross margins of the company, which will affect the operating margin and the free cash flow that the company generates. So normally when you have large drawdowns in the stock market, it can either be just a macro event that doesn't really affect the operations of the company, which is the best kind. When you have a company that's going to do great in the current macro climate, but the total market is just dragging the stock price down, then you can just keep on buying because it's not going to affect the operations of the company. So eventually the stock price will correct itself. But then on the other hand, you have a case like Lululemon where these tariffs are definitely going to affect the bottom line of the company, and it's going to affect the operations. So that is something entirely different. At this moment, I don't think anybody really knows how it's going to affect the company. It's just something that we have to see. On the earnings call, Kevin McDonald, the CEO, talked about the effects of the tariffs not coming really into effect until in the later part of 2025 or early 2026. So at this point, we'll just have to wait and see. What I'm doing personally with my stake in Lululemon, which is, I think my average cost is around 270 and the stock is trading at 240. So I'm not really down that much. It just goes to show you the importance of not overpaying for a stock. Even if it's high quality, you have to factor in the margin of safety. But at this moment, I have about 8 or 9K invested in the company, and I'm going to be holding for now to see what happens with the company going forward and with the tariffs. But at this moment, I'm not going to be adding and definitely not selling. And you see all of these news reports about uncertainty being really bad for investors. But that's something that, as an investor, you have to be able to stomach. If you can't stomach uncertainty, the stock market really isn't the place for you to be in. You should have your money in bonds or just in a bank account. But I'm going to be stopping the rambling for now, and these next weeks and the months are going to be very interesting. And it could be a buying opportunity emerging for young investors or youngish investors like myself. So I'll definitely be making more videos about interesting companies, especially if the stock market continues to decline, which is something that we as value investors should cheer on because we are net buyers of stocks. So that will help us in the long run as long as we are picking good companies. But that's it for the video today. I do want to thank you for watching. Remember to like the video and subscribe to the channel if you haven't already.